a single 24-hour surge has redrawn the map of Ethereum's Layer 2 landscape. Total value locked on Base exploded by 17.33%, vaulting past $5.57 billion and cementing its place as the sixth largest blockchain by this critical metric. No other L2 came close to matching that pace. The immediate question isn't just why it happened. It's whether this surge reveals a structural shift in how decentralized finance grows and consolidates power. The data, pulled from DeFi Llama, shows more than a spike. It shows momentum solidifying into dominance. Base's TVL didn't just climb. It accelerated at a time when many Layer 2 networks are still fighting for traction. This isn't a flash in the pan. Since January 2025, Base's locked capital has surged from $3.1 billion to over $5.6 billion, a trajectory that's been largely uninterrupted. Today, it accounts for nearly 47% of all DeFi value across Layer 2 ecosystems. That kind of sustained growth suggests something deeper than incentives or short-term farming. It points to real user demand and capital sticking around. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The important part is not just the number, it's what's driving it. Base's structural edge starts at the top. As a network incubated and backed by Coinbase, it inherits something no other L2 can replicate: direct access to the largest retail on-ramp in crypto. When Coinbase users look to move beyond simple trading into DeFi, Base is the default, integrated pathway. This distribution advantage translates directly into on-chain activity. It's not just about marketing, it's about frictionless access. New users don't need to bridge, deposit, or even understand gas fees in the same way. They're onboarded with a few clicks, and that ease of use is quietly reshaping where value accumulates. But user access means nothing without strong applications. That's where Uniswap comes in. Over the same 24-hour period, decentralized exchange volume on Base climbed 5%, driven overwhelmingly by Uniswap's deployment on the chain. Earlier reporting from the Defiant highlighted that Base's weekly DEX volume recently hit $16.5 billion, enough to briefly surpass both Ethereum and BNB Smart Chain. That's not just a headline, it's a signal of liquidity gravity. Uniswap, fragmented across chains, now sees Base contributing roughly half of its total revenue. These two ecosystems aren't just coexisting, they're becoming interdependent. Yet the dominance isn't absolute. The Base TVL increase, while impressive, still operates within the shadow of Ethereum's mainnet. Base is a Layer 2, meaning it relies on Ethereum for finality and security. Any congestion or spike in Ethereum gas fees can ripple through to Base, impacting user experience. And while Coinbase's backing is a strength, it also raises questions about decentralization. Is Base truly open, or is it a walled garden with corporate oversight? These aren't just philosophical debates, they're practical concerns for developers and users who prioritize censorship resistance. Another uncertainty looms: sustainability. Can Base maintain this growth without continuous injections of incentives? Other L2S like Arbitrum and Optimism are refining their own models, and new entrants are launching with aggressive rewards. The current surge may be partly fueled by new farming opportunities or token incentives that could dry up. The real test will be whether activity holds when the short-term yields fade. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The final takeaway is this: Base isn't winning because it launched first or spent the most on marketing. It's winning because it solved distribution at scale. The Base TVL spike is a symptom of a deeper trend: centralized on-ramps funneling retail capital into decentralized applications. The network isn't just growing, it's becoming the default experience for a generation of users who don't want to bridge, don't want to manage keys, and don't want to wait. Whether that's good for decentralization remains debatable. But for now, when it comes to Ethereum Layer 2 dominance, the data is clear. The next signal to watch: whether other chains can replicate this user acquisition model, or if they'll be left chasing a lead that's only widening.